Welcome to Markets Now. I'm Michelle Roque with Kent Beadle of Paradigm Futures. Well, the grain trade is mostly higher except for winter wheat contracts this morning. Over in the livestock, we're mixed with cattle lower. Hogs are to the plus side. All right, Kent, let's talk about the soybean and the corn market. Both maybe trading and putting a little weather premium in, but also trading some pretty darn good new crop exports, right?
Yeah, that's correct. We had, nearly 2.5 million tons of new crop bean exports, 1.5 million tons of new crop corn exports. The marketplace is obviously shifted to U.S. Origins in beans. We're quite competitive in corn. We're not going to get all the business. South Korea, for example, is buying Brazil this week, and Argentina is what we hear. But we're getting our fair share of it. And there is a lot of demand in the world for corn at this price. I don't think it's lost on world importers that the opportunity to buy U.S. grain at a 20 to 25% discount to what it actually costs to produce it is something that is lost on them. And they know that while a strong yield and big supplies might give them that opportunity for at least a little while, that opportunity can't last forever because farmers are not going to produce. We're already hearing things like 30% less fertilizer going into Brazil for upcoming planting season. We expect, if prices stay here, that U.S. corn acres are going to fall somewhere in the neighborhood of 4 to 6 million acres. I would say an 85 million acre number from the USDA next spring would be expected if we're this cheap.
So soybeans again, weather. We saw some areas that got some rain, some got missed, but also 96 million bushels of new crop exports. And I guess, talk a little bit about the fact that we are still behind, but we're getting caught up in a hurry. But can we catch up in the new crop soybean exports?
Yeah, so that's the big question, is how long are these sales going to last? All right, we are catching up. And the USDA on the last balance sheet actually raised USDA exports for next year. And, we're looking at trying to average somewhere in the neighborhood of 1.5 million tons between now and the middle of January. All right. Now you have weeks like this where we sell 2.5 million tons, and it certainly helps. That's what we're going to need, though, to fully, to bridge this gap and to actually be able to hit the USDA targets, because we know that in January, the market is going to shift again, and that Brazil is going to be the cheapest soybean for a good portion of the summer. But it has just been very interesting to watch a couple of things. Number one, we've loaded a couple boats here in August. That means that the Brazilian has not been able to execute to the extent to meet full Chinese demand. We know that premiums for Brazilian shipment in February and March have actually been making new highs, and this is on a crop that hasn't even been planted yet. But there is, again, really, really good demand, and again, at these lower prices, we might be surprised at how much the Chinese might be willing to purchase at these 4-year lows.
No doubt. Well, hopefully that'll start bottoming this market in both corn and soybeans. But do you think the weather that we've had here, have we trimmed any yield on corn or beans, in your opinion?
Given the temperatures that we had and the soil moisture situations in some parts of the Eastern Corn Belt, and I'm thinking Southern Illinois, I'm thinking Southern Indiana, I'm thinking most of Ohio, right? You've got lower amounts of water in the soils right now. And we've had a 2 weeks stretch of some pretty hot temperatures. And we didn't actually relieve that situation with the front that came through here yesterday, in southern Illinois, in southern Indiana, and Ohio. And so it's very likely that in general, the size of the soybean crop is probably a little smaller than what we thought it was a week or two ago. I would also add that there are reports through Illinois and into Iowa of sudden death rearing its head, and that those reports suggest that the situation might be a little worse than it's been here over the past couple of years.
Yeah. Wheat market, we're mixed this morning. Winter wheat actually, at least Chicago or SRW wheat, did see some follow through on the key reversal earlier this week. But also talk about what's going on with spring wheat, because we're hearing some quality issues. So how is the market rectifying all of that?
Well, it tends to do things with the spreads, okay, when you start having quality issues. So first of all, if you have poor falling numbers or vomitoxin issues in a spring wheat crop, which is what we have this year, you're going to see a lot of that off quality wheat end up getting moved to Duluth. And that those extra supplies of lower quality wheat in Duluth have a tendency to weigh on the front end of Minneapolis. So, for example, last week, while wheat prices were down hard, Minneapolis CEP was down the hardest. You're also going to trim the premium that Minneapolis has to Kansas City. So you'll have some folks buying KC wheat, selling Minneapolis wheat, and obviously buying Chicago wheat and selling Minneapolis wheat. That's what tends to happen, as well as widening the carries in Minneapolis itself. And we've seen some very large carries in Minneapolis.
Yeah. And of course, I talked about the key reversals like in Chicago wheat, but can the wheat market bottom? Is it bottoming, or do we have to wait for the European market to bottom first?
Well, I think that that the U.S. markets kind of led the European markets lower, because the European markets are still, in fact, dealing with a lower French crop. And even if the Ukrainian and Russian crops turned out to be a little bit bigger than we thought they might be in May, they're still down year over year. But what's happened is that there's been some other political things going on. Turkey, for example, putting on import tariffs on wheat that have pressed down on Russian wheat values. And all of those things kind of worked to kind of help the Paris milling market catch up to the rest of the wheat markets here. And, are we going to be able to bottom? Sure. We're going to find a bottom the same way that these corn and soybean markets are going to find a bottom. And that's going to be when wheat gets put away and has a hard time finding its way out, while demand for this cheaper commodity ends up building, in different parts of the world.
No doubt. Okay, cattle market, good technical action to start the week, but lower yesterday and today. So is that a function of some of the early cash trade that we're hearing? And it's not even really early at this point, but some of the cash trade being sharply lower, or not?
Yeah, we're hearing some pretty soft numbers, especially in the dress markets here in the north. We've heard some $5 to $7 lower trade. Obviously, the cutouts have been quite soft as well. And what we're doing is we're actually taking some of that big premium that we had out of the north. If you remember, we were $10, $15 above delivery values, and some of the trade in the Southern Plains, and we're making that go away. And that's really what's happening in cattle right now. Clearly there's an underlying concern about consumer demand at this higher price, as well as consumers trading down into cheaper proteins, pork and poultry. And this is triggering a fair amount of liquidation trade in that spread. So, funds are short hogs, they're long cattle, they're moving out of those positions, and that's obviously supporting pork a little bit, but certainly weighing on the cattle here yesterday and again today.
Yeah, hogs conversely to the plus side. is that because of the strong exports this morning, or are we seeing some cattle hog spreading, or what is it?
Yeah, it's likely a function of the good exports, and we certainly need good exports in pork, right? Because we continue to run, our slaughter ahead of a year ago, and we've got a lot of product out there, but we've priced in a lot of that as well. And again, we think demand for pork is going to be very solid here. And again, you've got fund shorts that are looking to cover. And so that's where the support is coming from, is both from the demand side and speculative short cover.
All right. And we've also seen the futures discount to the index probably a little supportive too, Ken?
Yeah, that it is supportive. We keep in mind that we typically have a fairly sizable discount to the cash at this time of the year, as cash markets tend to work their way lower over time.
Gotcha. All right. Thanks for joining us, Kent Beadle with Paradigm Futures. Remember, futures and options do have substantial risk. This is Markets Now.